What is up, guys? My name is Hassan and welcome back, everyone. Thanks to you guys, our subscribers are increasingly rapidly. I'm getting about 2 a day, which I consider a lot for my small channel. And another thing is that, guys, I might not be here for the next I'm actually going away traveling a little bit, so I'll be gone for maybe like 5-6 weeks, a month. Yeah, I'll be gone about maybe 5-6 weeks or a little bit less, traveling the world. And today I'm going to be giving you guys an update on my $10,400 Robinhood portfolio, or at least almost there. And I'm going to show you guys the companies that I'm invested in, the dividends that they're paying me, and what am I planning to do with those companies. Am I going to stick around, and my just like long-term perspective on it. And more importantly, guys, if you guys stick around till the end, I'll tell you guys about a new investment that I made outside the stock market, and that just will be a special treat for you guys. As always, before I continue, you guys know that I have to cover some bases or give you guys a quick disclaimer. I'm not a financial advisor, nor do I know you personally or your financial situation. I am not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks. It is just a place for you to start your own due diligence. And remember, you hold yourself accountable. Do your research before you hit the buy button, and make sure you're holding yourself accountable. Don't just follow all these YouTubers without doing your own research, because a lot of time we can get caught up and we end up making bad mistakes. And another thing, you guys can see that here, $75. All right, VET paid me about $3 in dividends. Pambina, $2.35. So, and then I bought Johnson & Johnson and so on. So let's get started. So one day I'm pretty much even. I'm up for about 0.43. 1 week I'm actually down 2.29%, and then for the month I'm up 4.6%, or $455. 3 months I'm up slightly, a little bit. I'm up about $190. So even though I don't care about my capital appreciation, I just want to compare myself with the S&P 500 to see where I stand. Alright, so S&P 500 is at $2,995. If you look at it in the 1 month, so here the S&P 500 is, for the last 1 month, is up about almost 2%. And if we compare that to my portfolio, for 1 month I'm up about 4.6%. So pretty much, if I compare myself with the S&P 500, I'm up double in the last 1 month. That doesn't mean I'm a better investor. It just, my companies are doing better. And remember, I said that I'm a dividend investor, and I'm more about collecting my rent income or my income as dividends. So this is my $10,400 Robinhood portfolio. Oh, and I'm going to show you guys the companies invested in. So we got my number 1 holding, my Baozong. Have 52 shares. I'm up massive, about 39%, or almost 40%. Even though it doesn't pay any dividend. Hopefully I want this to be at least like my number 10 as I continue to add money to it. But I'm doing a killing. It's up, if you look at it in the 1 year. Oh, it's actually down. So if you look at it, I've been having it for more than a year. If you look at it past 5 years, is up almost 400%. 3 months is up 22, but I'm up about 40%. Another company, AMD, solid company. I'm up 66%. Everybody knows about this company, and it doesn't pay any dividend. Alright, so now my main companies actually start after my first two holding, because I'm not planning to add any more money of those two. I like to invest in companies that make so much money that they don't even know what to do with it. So they end up paying it back to their shareholders as dividends. These are the types of companies I like to invest in. For example, Waste Management. I have 8 shares. I'm up about 12.5%. And if we go scroll down, and then in June, they paid me $4.10 just for holding on to this company. Alright, so we got Waste Management. I got Pambina, PBA, 18 shares. I'm up. It's a monthly dividend company, which is a pipeline company. It pays me, I'm up about 5%. And then if we look at it, scroll down to the dividends. If we go, say, a few months back, let's say we go to March, they paid me 53 cents. And then if we go to April, they paid me $1.09. And then May, and then May, they paid me $2.04. And then June, they paid me $2.29. And then July, they paid me about $2.35. You can see that on a monthly basis, my dividend is constantly increasing month after month. And these are the types of companies that I like to invest in. Companies with very low debt and that has a good cash flow. 3M, have about 3 shares. I'm up 2%. And then I have Vermilion Energy, another Canadian pipeline company. No matter what the oil price is, I make money because they transport oil and gas. I'm actually down on this. If we scroll down, we can see that $2.33 for May, and then June, and then July, $3 per month. Another company, Texas Instrument. Actually, where I work, all the students are using this. They all have the Texas Instrument calculators. I'm up massive 25%. And you can see that you guys can actually invest in companies like not high-flying companies, like companies under the radar, and still make a big return with 25%. We got Microsoft, 3 shares. Everybody knows about this company. I'm up about 38%. You guys can see that. 3 shares. High Crush. Oh my god, I never lost this much. I'm not perfect. Even though most of my trades or most of my investments, I actually make quite a lot of money or some money. But this is the company that I lost the most money in. I should have sold it when they cut their dividend. But lesson learned. Nvidia chip making, even though they don't pay much dividends, but I know in the future, you can see that here, I've been getting December 16 cents, March 16 cents, and then June 32 cents. Eventually, they will increase their dividends, and I'll be there to collect it. Broadcom, 1 share. I'm up 11%. And then they've been paying $2.65 every 3 months. So at this point, I want to cover a question. And the question is, why did I buy these companies? Out of all the companies out there, why am I investing in these dividend companies? So before I even go there, the main primary reason before I even invest in a company, before I look at their debt. How much debt do they have, or debt to equity ratio? So we're going to use this example. PKG Packaging Corporation, pretty much a paper company. I go view all. I look at their market cap, about 9.29. And then I scroll all the way down and look at their total debt. Okay, now is what? 2.73. So first thing I do is I take their cash and I minus it from 2.7, and then I see, and I do their debt to equity ratio, and I see that it's a small amount, and then I'm like, okay, this company doesn't have much debt, and I will invest in them. After I do that, I go to Seeking Alpha. So the website Seeking Alpha right here. So the question is, why did I buy these companies out of all the companies? So I go to Seeking Alpha. Guys, if you haven't signed up, make an account. It's free. Awesome way to analyze the company. I go to Dividend Scoreboard. Look at their yield, 3.2%. Okay, look at their payout ratio, 38. And I look at their 5-year growth. They've been giving their shareholders raises about almost 15% in the last 5 years. Remember, they already made my initial cut of having low debt. And then I look at their dividend yield, payout ratio, their dividend growth history. Like if you look at it, see that, you can see, it's hard to see, you can see that they're increasing it as time goes. And then another thing that I look at is that I look at their peers. A lot of people don't do that. Is you go to Seeking Alpha, go to peers, and then they give you their competitors. You can see that PKG is, and then you can see their WestRock, IP, KS, JGPK, and then you look at their numbers, their qualitative numbers, and you compare it, and they give you their valuation, they give you the growth, a revenue growth, and then you look at different metrics, their PE ratio, their value, and so on, their profitability, their margins, and then you decide. Don't just buy the company that you see. Look at their competition. Sometimes the competitors might be a better buy. So make sure you do that. Go to Seeking Alpha and then click on peers. All right, and actually, I'm actually gonna buy PKG, packaging company. I already have IP. Right now, IP has a lot of debt. That's why I'm not buying no more of it. This one doesn't, so I'm going to continue adding, or I'm going to start adding PKG. All right, let's go back to my holdings. So here we're back with Broadcom, 1 share, and then have Abby, 4 shares. They're making an acquisition again. They have high debt. I'm not going to add to this no more. I'm down 4%, and then I have IP, 6 shares. I'm down 2%, but I've been collecting their dividend every 3 months. You can see that I collected 150 in March, and then in June I collected 250. So I have IP, Macy's, 10 shares. I have Contour Brands. It was a spin-off. Take a look at it. A solid company, guys. I'm already up 6% almost. And it was a recent buy. Contour Brands. I have Honeywell, 1 share. Solid company. JD. This doesn't pay any dividend, so I'm not gonna add to it, but I don't want to sell it because I don't have much equity. Only $152. And guys, if you haven't subscribed yet, hit the subscribe button, hit the like button. It really helps my channel grow immensely. So I appreciate the support and going forward. Thank you guys. Nokia, 26 shares. PPL, it's utilities companies, pays a dividend, 4 shares. I have Neo, I don't know. Stay away from this company. I'm already down massive. You see, I didn't do my due diligence. I did not follow my fundamentals of high with low debt, doesn't pay dividend, and I paid for it by losing 33%. Every time I break one of my fundamental rules, I end up paying for it. General Mills, I'm not adding anymore because of their high debt. 2 shares, I'm up massive, 31%. And then I have Ericsson, my 5G play, 10 shares. And then VF, take a look at it. I actually want to add more of this. 87, 1 share. Pfizer, 2 shares. I'm pretty much even or down 1%. Newell Brands, another high debt. I don't want to add to this. That's why I'm just holding on to it by collecting their dividends. And that's it, guys. Those are my portfolio. Sorry if it was, and okay. As all, thank you guys. Hit the like button, share the video, continue to support as always. Thank you. See you next time.